All right, today we're diving into one of the biggest stories in retail this quarter, American Eagle's massive Q3 earnings report. Management is calling it a significant trend change, and let me tell you, the market certainly agreed.
Just look at that, a 15.1% jump in the stock in a single day, right after the numbers came out. That is a huge pop, and it tells you one thing: Wall Street was caught completely off guard. So the question is, what's really driving this?
Okay, let's break this down. We're going to look at the numbers that absolutely crush the estimates. We're going to get into the strategy behind this turnaround, and we'll look at what management is signaling for the all-important holiday quarter.
First up, the headline numbers. And listen, this wasn't just a small beat. This was a broad-based outperformance across every single key metric that investors were watching.
So here's the scorecard. The street was looking for about 43 cents in earnings per share. American Eagle comes in and delivers 53 cents. Revenue hit a record $1.36 billion, way ahead of what anyone was thinking. And comparable sales, the key metric, was expected to be kind of weak, maybe low single digits. Nope, they came in at a strong positive 4%.
The scale of that earnings beat is it's remarkable. That 10-cent difference, that's nearly a 23% surprise to the upside. In a really tough retail environment, that kind of outperformance gets a lot of attention.
So how'd they pull it off? This wasn't just some lucky quarter. Management walked everyone through a series of really deliberate strategic moves that are finally starting to pay off, especially when you look inside their brand portfolio.
You've really got a tale of two brands here. The core American Eagle brand, it saw some solid improvement with a 1% comp. But the real growth engine, the star of the show, is Aerie. It posted a massive 11% comp. That brand is just firing on all cylinders, and it's driving the lion's share of the upside.
The CEO, Jay Schottenstein, he framed this perfectly. He called it a trend change that was driven by decisive steps. Now that's language for investors. It tells you that management doesn't see this as a one-off thing, but as the beginning of a real, sustainable improvement in how they operate.
And a key driver? Their huge investment in marketing. Management pointed directly to two really high-profile campaigns: the Sydney Sweeney Great Jeans campaign and a collaboration with Travis Kelce. And the result? They generated over 44 billion media impressions. But more importantly, it drove about 1 million new loyalty members right into their ecosystem. That's huge.
Okay, let's switch gears and talk about the outlook. Because a great quarter is one thing, but Wall Street really, really cares about what's next. And on that front, American Eagle gave the bulls everything they could have possibly hoped for.
They didn't just meet expectations or reiterate guidance. No, they raised it, and they raised it significantly across the board, which signals some major confidence heading into the holiday season.
Just look at these numbers. They boosted their operating income forecast by about $30 million. And even more impressive, they now expect Q4 comparable sales to grow 8 to 9%. That is a massive acceleration, not just from their old guidance, but from the 4% they just posted.
But it's not all clear skies. Management was pretty transparent about the biggest headwind they're facing, a roughly $50 million hit from tariffs that they expect in the fourth quarter. The fact that they can raise guidance so aggressively despite this pressure is what makes the whole outlook so powerful.
So let's connect the dots here. You've got a huge beat, a massive guidance raise, and a clear strategic story. This is the exact combination that gets investors really excited and drives a major reaction in the stock.
And this move was backed by real conviction. Trading volume on the day after earnings was 3 to 4 times the daily average. This wasn't just algorithms reacting. This was big institutional money moving into the stock, forcing anyone who bet against it to run for cover and buy back their shares.
And then the CEO just added fuel to the fire with this quote on the earnings call. He confirmed the fourth quarter is already off to a strong start with a record Thanksgiving weekend. That basically validates the aggressive new guidance and tells the market, hey, this momentum, it's real, and it's happening right now. So the narrative that the market bought into is pretty clear. This is a marketing-fueled resurgence. That heavy investment they made in building up their brand is paying off big time. It's reigniting growth in the core brand, and it's supercharging the already powerful Aerie growth engine.
So, what does this all mean for the stock going forward? After a quarter like this, the bar is obviously set a lot higher now. The real question for investors is, can this momentum be sustained? We've analyzed the results, we've listened to the call, we've modeled out the guidance, so what's the trade from here, heading into the next earnings report?
Here's our prediction scorecard. We believe the company is going to hit the high end of that 8 to 9% comp guidance, and it's going to be driven by Aerie comps well into the high teens. We expect the stock to continue outperforming its retail peers as the market fully prices in this turnaround story. And that leads us to our official rating.
We are rating American Eagle as outperform. The combination of that accelerating top-line momentum, a clear strategic catalyst in marketing, and a really strong holiday setup just makes a compelling case for continued upside from here.
And finally, just a quick reminder, this explainer is for informational purposes only. It is not financial advice.